Many believe that success in the cryptocurrency market comes from a secret formula. They search for the perfect indicator, the flawless chart pattern, or the one guru who knows all the answers. They spend countless hours studying market analysis, learning complex terminologies, and watching price movements like a hawk. While technical knowledge is certainly a component of trading, it is only one piece of a much larger puzzle. The real arena where trading battles are won or lost is not on the screen in front of you. It is within the landscape of your own mind. The market is a reflection of collective human psychology, and to navigate it you must first understand your own. The market does not know or care about your analysis, your profit targets, or your personal financial situation. It is an impersonal force, a stream of probabilities moving from one moment to the next. The charts simply provide a framework to identify patterns and possibilities. Your mind, however, is what interprets this information. It is the filter through which every piece of data must pass. If that filter is clouded by fear, distorted by greed, or shaken by uncertainty, then your perception of the market will be flawed. You will not see what the market is offering. You will only see what your emotions allow you to see. This is the unseen battlefield. Think of trading not as a science, but as a performance art that requires immense mental discipline. A professional athlete doesn't just learn the rules of the game. They spend years conditioning their body and mind to execute flawlessly under pressure. Similarly, a successful trader doesn't just learn how to read a chart. They train their mind to remain calm, objective, and decisive when the money is on the line. They learn to accept risk without emotional resistance and to view losses as a simple business expense, not a personal failure. This mental conditioning is far more critical than knowing every candlestick pattern in existence. The journey to becoming a consistently profitable trader begins with a simple but profound realization. The market is not your enemy, and it is not your friend. It is a neutral environment of opportunity. The only real obstacle standing between you and consistent success is your own internal response to what the market does. You cannot control the market's next move, and trying to do so will only lead to frustration and financial pain. What you can control, however, is yourself. You can control your perspective, your expectations, and your actions. This is where the real work of trading begins, long before you ever place an order. Every trader, from the novice to the seasoned professional, will experience a powerful spectrum of emotions. The most common and destructive of these are fear and greed. Fear often manifests as the fear of missing out, or FOMO. You see a coin skyrocketing in price, and a voice in your head screams that you must get in now before the opportunity is gone forever. This is not a logical decision, it is an emotional reaction. You abandon your strategy and buy at the peak, only to watch in horror as the price plummets. This fear-driven impulse ignores risk and probability, leading to predictable and painful losses that could have been easily avoided. On the other side of this emotional coin is panic selling. Imagine you have entered a well-researched trade according to your plan. Suddenly, the price dips unexpectedly. Your heart starts to race, and the fear of losing money becomes overwhelming. You forget your analysis and your strategy, and you sell your position for a loss just to make the emotional pain stop. Moments later, the market reverses and moves back in your intended direction, leaving you with a loss and deep regret. Fear caused you to react to a random market fluctuation, as if it were a guaranteed outcome, sabotaging a potentially profitable trade. Greed is an equally dangerous force in the trading arena. It whispers in your ear after a winning trade, telling you to hold on for just a little more profit. You have a clear profit target, but greed convinces you to ignore it. The market then reverses, and your handsome gain turns into a break-even trade or even a loss. Greed also fuels the desire to over-leverage or risk too much capital on a single sure thing, which can wipe out an entire account in a single blow. It creates a mindset where enough is never enough, blinding you to prudent risk management and turning trading into a gamble. Hope, while sounding positive, can be just as damaging when misapplied in trading. It is the emotion that keeps you in a losing trade, hoping it will turn around. You ignore your stop loss, convinced that the market must eventually prove you right. You might even add to your losing position, a practice known as averaging down, turning a small, manageable loss into a catastrophic one. In trading, hope is not a strategy. The market does not care about what you hope for. It will do what it will do, and your job is to react with discipline, not wishful thinking. Accepting a small loss quickly is a sign of strength, not weakness. To To protect yourself from the emotional chaos of the market, you must build a fortress of discipline. The foundation of this fortress is a clearly defined trading plan. Before you ever risk a single dollar, you must know exactly what constitutes a trading opportunity for you. What are your entry signals? Where will you place your stop loss to define your maximum risk? What are your profit targets? These rules must be written down and committed to. This plan is your shield. When emotions of fear or greed begin to surface, you do not have to think. You simply have to execute your predetermined plan with unwavering consistency. A critical component of your plan is strict risk management. One of the biggest mistakes traders make is risking too much of their capital on one trade, making the emotional stakes unbearably high. A professional trader thinks in terms of probabilities over a long series of trades, not the outcome of any single trade. A sound rule is to never risk more than 1 to 2% of your trading capital on any given position. By keeping your risk small and manageable, you remove the intense fear associated with losing. A loss becomes just another data point, a normal part of the business, rather than a devastating financial and emotional event. Another powerful technique is to avoid the temptation of revenge trading. This occurs after you take a frustrating loss and feel an immediate burning desire to win your money back from the market. You jump right back into another trade, often without a valid signal and with far too much risk, driven purely by anger and frustration. This almost always leads to further losses, creating a vicious downward spiral. After a loss, the best thing you can do is step away from the screen. Take a walk, clear your head, and analyze what happened objectively. Only return to the market when you are calm and ready to execute your plan flawlessly again. Finally, you must learn to detach your self-worth from the outcome of your trades. Your value as a person has absolutely nothing to do with whether a trade wins or loses. The market's movements are random over the short term. You can execute your plan perfectly and still have a losing trade. Conversely, you can make several mistakes and get lucky with a win. Your focus should not be on the outcome, but on your execution. Did you follow your plan? Did you manage your risk? If the answer is yes, then you have succeeded as a trader for that trade, regardless of the profit or loss. Developing a successful trading mindset is not about eliminating emotions. That is impossible. It is about learning to recognize your emotions and act independently of them, adhering to your system with discipline. This requires patience, a quality that is scarce in a world of instant gratification. The crypto market can offer incredible rewards, but they do not happen overnight. You must be patient enough to wait for high probability setups that fit your plan, rather than forcing trades out of boredom or impatience. You must also be patient with your own learning curve, understanding that mastery is a process filled with ups and downs. Every trade, whether a winner or a loser, is a learning opportunity. The best traders keep a detailed journal. They document their reasons for entering a trade, their emotional state at the time, and the outcome. They then review this journal regularly to identify patterns, not just in the market, but in their own behavior. Are they consistently making the same mistakes? Is a certain emotion causing them to deviate from their plan? This self-analysis is invaluable. It allows you to learn from your losses and reinforce your winning habits, turning every experience into a step forward on your journey to consistency. Embrace a mindset of abundance and probability. Instead of viewing each trade as a life or death event, see the market as a never-ending stream of opportunities. If you miss one, another will always come along. There is no need to chase a missed trade or lament a loss. The market will be here tomorrow and the day after that. Your job is to be mentally prepared to take advantage of the opportunities that fit your edge when they appear. This perspective liberates you from the pressure of needing to be right on any single trade, and allows you to focus on consistent execution over the long term. Ultimately, your success in the volatile world of crypto trading will be determined by your mental fortitude. Your technical analysis skills can identify a potential opportunity, but it is your mind that will allow you to execute it, manage it, and exit it with discipline. The market will constantly test your resolve, challenge your beliefs, and tempt you with emotional traps. Winning this inner game is the final frontier. Mastering your own psychology is not just part of the strategy, it is the ultimate competitive edge that separates the consistently profitable traders from everyone else.